Hello, 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 and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling, 4th of June, 2018. No trade calls, no recommendations or response for their own stuff. We're here for educational purposes only. So what's going on? We're doing a little weekly update, weekly outlook to see what's going on. So keep in mind that this week will be interesting. We've got an awful lot of news out of Australia. We've got an RBA rate statement. We've got Draghi speaking. We've got quite a lot of stuff. Trade balance out of Canada. So there's plenty of stuff on the data counter, and plenty of central banks on the data counter. I think in terms of an actual data week, what's far more interesting is going to be next week, right? Because we've got the FOMC with a press conference, we've got the ECB rate decision with a press conference, and we also have the BOJ with a press conference. So keep that in mind, right? I think that's an important thing if you're trying to think about the context, is that we do have stuff on the wires this week, but if anything, the big moves are for things, whatever starts to move or any swing move to really get traction, it will likely have to be confirmed, not this week, but the following week. Why? Because we got the ECB, the FOMC, and BOJ on deck with a press conference, right? So that's the background you have to keep in mind. Not an awful lot has changed since we last this outlook, except for, of course, we'll look at some of the charts, equities grinding higher, etc. One thing which we're going to talk about in detail this week again in the weeklies, but I just wanted to put out there before I forget because I think it's interesting, is keep in mind the context, keep in mind what's happening in equities, and take a look at what Goldman is doing. Right, I'm just going to leave it there, but look at Goldman. Here's the monthly chart. Goldman, you'd really want to keep an eye out for how this behaves this week going into these lows, about 12.15, around that area if we get there. And look at it. That was the monthly. I beg your pardon, I had to sneeze. So this is the weekly, right? And this is the daily. So I think you have to keep that in mind, right? It's not exactly the sign of a very healthy move, but I would strongly urge you to keep that in mind, keep that on your radar, and go back and look at your chart of what that means when you compare that to what financials do, to what markets do, et cetera, et cetera. Now, going through some of the other charts which are interesting, we've discussed crude. Our base case here on crude, I got a lot of questions, why aren't you posting charts about crude anymore? What's going on? Our base case hasn't changed here, right? We topped out at the 70 and we're coming back down. So when you get a situation where OPEC is starting to jawbone it lower, when we're pressing above the 70s, some people saying, going back to what Trump said, et cetera. Basically, they're starting to jawbone it lower into the 70s. And our base case is, should it come back down into the 6260, which is that big pivotal level on the weekly or lower, they're going to start jawboning up because, Aramco, IPO, et cetera, et cetera. So our base case hasn't changed. Is right now, unless something hits the wires, then you might get a good chance to, buy it for a rip or buy it for a big unwind. But unless something really important happens, especially we got next meetings coming up, our base case is that we're going to be stuck here, and this might give you intraday trading opportunities, but we don't think the time is right to look for big swings. So as far as we're concerned, this is very choppy, and it's basically just led by OPEC jawboning. So we're not that interested in looking for particularly big moves. Now, another thing I would urge you to take a look at, we've discussed in the past, if you look at the way basically a lot of these European indices are trading, and you look at something like the DAX on a weekly, it's not particularly pretty. You can look at FTSE, you can look at IBEX, you can look at the MIB, right? Our base case on the MIB is that basically we've topped out, and they're just not looking very, very pretty, right? They're just not looking very, very pretty. So I think you have to keep that in mind. Even though U.S. equities are still grinding higher, the picture out there isn't particularly bullish, especially as we're going through traditionally weaker seasonals, right? So that's something we'd keep in mind. In terms of a DXY, our base case hasn't changed. Our base case is that in terms of velocity of move, the risk is to the downside, not to the upside. We think that unless we get something sustained out of the central banks, something key happening, will likely be chopping around inside this range. So it will take something important for DXY to be able to break above the 95.10s, and it will take something extremely important or key to change for it to break below the 88.20. So we expect this to stay inside a choppy range, and clearly, as we're stalling here, as far as we're concerned, the way we look at the market, we like to take shots where we can get an asymmetric risk profile. So basically down here, this was hunting for longs, and up here it's hunting for shorts, either for a move back into mid or move to the opposite side of the range. But we have zero interest in getting long into a brick wall. We have zero interest in getting short to a brick wall. If anything, you wait for the wall to break first. And this brings an awful lot of interesting opportunities on the Forex side, and these are all trades which we've been discussing on the blog and the outlooks and the weekly webinars. And basically, we did a video, if you haven't watched it, on Euro, and basically what we discussed as we're trading here into this weekly's probably better, as we're trading here into these lows. And you can look at this on a 4-hour chart. It's much clearer. This was a very nice opportunity to try and get long, to see if you get a little bounce, possibly into the 120s, even into the 122s. You know, that could be a corrective bounce, but you can look at the video. We discussed that in a lot of detail there. Aussie, I'm not going to go through all of them, but Aussie is another interesting one here, where you can see how it based quite nicely, put in a reversal candle, very choppy, but managed to hold back above this previous zone, you know, as we're looking at the dollar index topping out, and then bam, it's rotating right back up into all those resistances. Right here, pretty much the quick pips are done as far as we're concerned on Aussie to the upside. But again, this was a very nice trade. You have very similar action on Kiwi. You have a very similar action. This was our favorite trade, was the short on USD CHF into these highs. And I'll try and do a video if I can this week, but another one is, I think, the dynamics which are going on cable, which if you look at it on the weekly, this is the first time since, remember, we got short into those highs. This is the first time where it made sense for us to try and look for longs on cable. And basically what happened here is, you know, essentially we came back right back into the bottom of this channel, tried to base, managed to base around a previous interesting level and the 300. If you look at the charts on the blog, we discussed the fact that as we came into the tighter channel, we were not trying to catch it. We were waiting for it to find support inside the 200 and the 300 DMA. So it came back below, still no edge, trying to stay short. You have to wait for it to stabilize and get back above. Then it put in a weekly reversal last week. So if anything, this is the first chance, right after the action. There was plenty of chances to try and be aggressive last week or even into this week. This is the first chance we feel this has a shot at bouncing a little bit after this big unwind, this big puke. Now I lost my train of thought. What else were we looking at? Bonds. We've been bond bears for years off that 170s, and we said in the last two weekly updates, we said this is the first time we considered getting long, and we got a nice little pop back into this level. Now if you look at the bonds back on the daily, this hasn't changed. That's why I said not much has changed since our latest outlook. But you see, we got that bounce back into that previous big support resistance level, and that's where the fight is going to be fought. So, you know, the quick pips on the bond trade here, those are done. They're for a move back into that zero. On the monthly, it's a much cleaner view. See, this is what we're looking for. A to B, bounce back in mid of the channel, then it came down, it got no traction ahead of the lower end of the channel, ahead of the 123, and we said, okay, this is time to look for the bounce. But you have to understand, in the context of this move, the bounce was just a tactical play. Here, either we get sold and we have to fully complete this into that 23 extension, into that channel, or this is where it gets interesting this week. That's why it's going to get interesting into Fed next week. If this bounces, there's a potential for a very, very, very big squeeze. Now, if we get that squeeze action, if we start to close back above there, then this is what we're going to do. We're going to move our fib back down, and the potential is going to be possibly all the way back into the 160s. Now, it's a little bit early for that, but that's clearly something that is on the radar. And then let's just do one more, because I want to try and keep these videos short. Let's go back to the ES. What's going on the ES? Let's get on the daily. So here the ES is chopping around that 127. As we said in the last video, the fact that it can't close below the 127, the only thing you can say about that is that it's holding a bullish bid, right? Unless you get a close below that 127, it's very, very hard to get aggressively short. So what you want to watch going into this week is how we behave at these highs. Now, if we get a quick ramp and break above these highs and it holds, then there is zero edge in trying to stay short, as the path of least resistance is likely for this to continue to try and grind back higher into the 128s and try and take out these highs. If we get failures here, then we expect the 2700 to get tested very, very quick, very, very quick. And if that 2700 breaks, then we expect to move back into the 2600 this week. So that's going to be, on any test there, that's going to be pivotal for a bounce back up or move back to the 126s. Sorry, I have to kill somebody who's calling. And basically here, that's where we are, right? That's where we are. So we'll have to see how this trades. And, let's see what we get, guys, right? Let's see what we get. Have an awesome one. Wishing everybody an awesome week. Have a great one. Let's see what we get. And again, I'll try and do some more updates this week on the blog. Have an awesome one. Take care, guys. Okay, bye-bye.